as a real estate agent, I hear buyers say to me, oh, I can't afford that house. I can't pay for that. So I want to put a different spin on the discussion and talk about affordability. So that's what I'm talking about today. Stick around. Hi, welcome back. My name's Joe Brown. I'm a real estate agent with Century 21, List with Beggins, located in South Tampa. Thank you so much for being here with me today. So in last week's video, which was market update, I said, watch this week because I want to give a tool for negotiations, right? And it surrounds the topic of affordability. So first of all, what is affordability? Yeah, it's really simple. It's what you can afford to pay, right? And really what you can afford to pay on a monthly basis. So, and I put some space here because I want to share some graphics with you. And this is going to be a short video. I know that'll make some of you happy. I know John will be very sad. But let's look at this first example, right? And you can see that the list price is $470,000. And buyers will say, house isn't worth that. I can't afford that. We will offer $450,000. And so let's say the contract is accepted at $450,000. And you take a standard mortgage, and right now it's about 6.6%. So each month you're paying $2,800. What was it? I wrote it here. $2,874, right? Almost $2,900 a month. Now that is just principal and interest. Doesn't include taxes or insurance or electric or anything like that, right? Just principal and interest. Well, is there a way to get that money down? Now, from a buyer perspective, you think, I'd save $20,000 on the price of that house. And you're still paying about $2,900 a month, principal and interest. Well, let's flip the script, right? So let's say you offer full price, right? So they're asking $470,000. You're going to offer $470,000, but you're going to ask for a concession. And here's the second chart, which shows the concession. It's a $20,000 concession. So listen, scenario one, scenario two, from a seller perspective, you offered $450, they accepted it. Second offer, you're offering $470, but they're giving $20,000 back. So that $450 is the same. But how you use that $20,000 is you buy the mortgage rate down. I'll talk about that more in a second. But let's say that $20,000, you can buy the mortgage rate down at full point. So, yes, you're taking a loan at $470,000, and but you're paying 5.6%. So now your payments are $2,600. What is it? $2,698, almost $2,700. So you're saving almost $180 a month, right? Just on principal and interest. So you see, it's not the price of the house. And so often I hear buyers say, "Oh, let's ask for less." Well, maybe it's not so much asking for less as asking for concession. And in this case, you use the concession to buy down the rate. So let me talk about buying down the rate. It's not an easy math equation, right? I can't tell you that it's 1% for every quarter point. So 4% equals 1. I can't say that because it depends on what type of loan and what your credit score is, right? So there's a lot of factors to figure out what that actual buy down rate is. Second thing, in this example that I showed, the list price was $470, and you're going to offer $470 or $450, whatever. Well, realistically, if the house is at $470, you're not taking a loan at $470 because you have to put, at the very least, 3.5% down. So really, your mortgage loan would be around $450,000, right? So this is just a quick example of the if you take a loan at $470 or a loan at $450. So my suggestion to you is, if there's a house you like, work with your agent. And listen, if you don't have an agent, reach out to me, and I'll be glad to help you search for a house and make this offer on your behalf. But you, instead of asking, hey, I want you to come down in price, saying, well, we'll pay your full price, but will you give us a concession so we can buy a full point percentage down? Because you will save money on a month-to-month basis. So in this case, right, you're saving almost $200 a month. Well, that's $2,400 a year. And for a lot of people, that'll be their homeowner's insurance, or a good portion of it, right? It'll certainly cover the electric bill. So this is about affordability. Don't look at what a house is listed for. Think about what you can afford month to month and asking for a concession to lower what you pay month to month. So anyway, I hope this was useful. I told you this would be a short video. Share this, please, with people you know who are going through a buying process or want to buy a house and don't have an agent. Reach out to me. Go to my website, JoeBrown.com, and JoeBrown.live. The JoeBrown.live is my WordPress site that I have many, many blogs out there for both residential and commercial issues, right? Topics. So reach out to me. Let me see if I can help you. And until next week, take care.